Welcome to the Savvy Investor, where it's our job to help you be secure in any economy. Today we're going to talk about what's probably one of the hottest subjects out there. Certainly here at the Savvy Investor, we get unlimited questions about this. We're going to talk about gold and commodities, and are they still the right place to be for the near future? Stick around, it's going to be a great show.
Welcome to the Savvy Investor. You can have financial security in any economy. Today is the day you can take control of your financial future and eliminate worry about your retirement forever. Each week, the Savvy Investor helps viewers just like you create and grow wealth, protect and preserve it, and distribute it in the most tax-efficient manner. And now, the Savvy Investor with your host, Michael Canet.
On today's show, we're going to talk about how to make money when gold prices go up. But more importantly, we're going to look at how to protect yourself when prices go down. Now, gold certainly is one of those hot topics out there, and we get lots and lots of calls here on the Savvy Investor, and even politicians are getting in on the mix. You see the likes of Fred Thompson and others all over television pitching gold. Now, before we go there, I want to take a look at the news because it's always important to see what people are talking about today. So in the news right now, just from CBS Money Watch the other day, a recent Gallup poll found that 30% of people think gold is the best long-term investment. But it's interesting because the article goes on that says, despite the widely held belief that gold is an inflation hedge, gold has historically been a poor hedge against prices in the short or immediate run. And they give an example that prices of gold hit $850 an ounce in 1980, on January 21st, 1980. But by March of 2002, gold had fallen to $293 an ounce. Now notice that during that time period, inflation kind of was going haywire. It wasn't horrible, but it clearly was in the 4% range. So overall, you would have lost money on gold during that time period. So that's something we want to think about. Seeking Alpha, a great source for people to do research, they have an article out there that says that gold is a good investment even after 11 years of bull run. And really what they're talking about is that the fundamental analysis out there that the secular bull run for gold is still available. They're talking about the fact that China still needs gold, and central banks are buying gold as a hedge against the market because of all the mess we see in Europe and even the debt crisis we're having here in the United States. And even USA Today has a great article out there about how investors can profit from pessimism with gold stocks. And really what they're talking about, again, is that whole concern that the world's falling apart. People are concerned that as the Federal Reserve prints more and more dollars and they devalue our currency, that the government's going to fall apart, inflation's going to kick in, and here's a place to put money to protect yourself against those things. Now, when we come back from our break, we're going to talk about what you can do to invest in gold, how you can make money when the market goes up, and some strategies to employ. Now, we're going to take a quick break. You're watching The Savvy Investor, and we'll be right back.
Join the host of the nationally syndicated TV series The Savvy Investor and best-selling author Michael Canet for this very important, life-changing workshop. Michael and his team of advisors from across the country have been helping families create and live the retirement they envision by carefully crafting a retirement income plan that can withstand any financial crisis. Michael will give you the tools you need to make sound investment choices and help you prepare for your golden years. At this workshop, you'll learn more than just where to invest your money. Michael will also share tax strategies that could save you and your family thousands in tax dollars. You'll learn important estate planning techniques that can help you avoid the high cost of a nursing home, as well as reduce or completely eliminate any estate tax. Now you can join him in person for these very informative workshops. They could be the answer to creating the safe and secure retirement you deserve. Call 866-597-1040 to see if you qualify to attend one of these workshops with best-selling author Michael Canet, host of The Savvy Investor. Seating is limited, so call 866-597-1040 to join us. If you're in retirement or retiring in the next 3 to 5 years, you must read Michael Canet's best-selling book, Surviving the Perfect Storm. Best-selling author and National Quill Award winner Michael Canet's Surviving the Perfect Storm is a must-read to prepare for your golden years. This amazing book can be yours absolutely free, but you must call 866-597-1040 now. Supplies are limited, so be one of the first 25 callers to receive your free limited edition autographed copy of Surviving the Perfect Storm. Call 866-597-1040 now.
Welcome back to The Savvy Investor. I'm your host, Michael Canet. Today we're talking about gold and how to make money when the stock market goes up, but more importantly, how you may be able to protect yourself if the stock market goes down. Now let's talk a little bit about gold first. If you think about it, gold really has no intrinsic value. It's really not worth anything other than our perceived value of it. It has no scientific use. It has no real medical use. They really don't use it for anything. It's not like silver. It's not like copper and other precious metals. Really, gold is just our perception. Now, obviously, it's been used for currency, and governments have used it to back currencies in the past. But for the most part, gold really has no other value other than what we perceive it to be worth. So with that in mind, let's take a little look at how gold prices have reacted over the years. Now I want to bring up a chart here showing gold just over the last year or so here. You can see it's been hitting some highs and it's been hitting some lows, but it's kind of trading in a range here. It's not being crazy. It's not going up and down like nutso, but it is going up and down, and you can see that. But it is trading in a nice little range. And I want to now bring up another chart showing gold over the last 50 years. Now, over the last 50 years, you can see some huge changes in prices of gold. It's gone up to highs and gone really low here, and we've seen the prices go in the 200 ranges all the way up to the $1,500 and $1,600 and even $1,700 ranges for an ounce of gold. And again, remember, this is all based on our perceived value of gold. It does nothing other than make us feel better about having something tangible, at least something we think is tangible, to hold on to and touch. Now, let's go back here. I want to take another look. I want to show you another chart here. The last 10 years. And here's where it gets sticky for us as financial advisors, as financial professionals. Here's the problem. You can see over the last 10 years, gold has had nothing but ups. And whenever we have a string of years where the market does nothing but go up and up and up, it should give you a moment to pause, but it certainly makes us concerned, because everybody understands things that go up eventually must come down. Now, that doesn't mean that the stock market is going to drop or gold prices are going to drop anytime soon, but from a defensive position, when you're trying to protect what you've earned so far, or if you're thinking about going in at this time, you really want to start thinking about, wow, I've seen the market go up, 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 and it's not a matter of if the market goes down, it's when gold prices drop and come back down to reality. And that's something we were going to focus on today. What happens, not if, but when gold prices drop back down to reality. Now, moving along with some of these charts here, we know things don't always go up forever. If you look at the NASDAQ during the 90s, remember these were the heydays, stock market going crazy. Literally, there were these guys that would go out and take darts and throw them at a dartboard. And they would throw this dart right at the dartboard, and that's the stock they would pick, and the stock would make bundles. It was incredible. It felt like you couldn't lose money in the 90s. But what happened in the 90s? Great. What happened in 2000? The stock market rolled over and died. 2000, we lost 20 to 25%. 2001 and 2002, all dismal years, and all those record profits and earnings that people had right out the window. So the NASDAQ, big bubble, big pop. Gold, we saw, big bubble. Is it going to pop? I'm not sure. But there's other things out there that have been bad. Look at real estate over the last decade. If you go back over the last decade from 99 to 2009, you can see real estate market zoom, 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 bam, big drop. What goes up eventually comes down, and that's our concern. And quite frankly, if you're thinking about buying gold, or if you own gold now, it should be a concern for you as well. People get caught up in the euphoria. We get that. At the Savvy Investor, people are calling us all the time. I want gold, I want gold, I want gold. And we certainly understand it. But with it, you have to come with a big caveat, because if the market is zooming up, you have to be prepared when the market drops, and it will eventually drop. Now, I don't want to be a doomsayer here, but you do have to be prepared for the market dropping. And, we have other bubbles just to substantiate what we're talking about. I know nobody remembers the tulip bubble in the 1600s back in Denmark, but the Dutch bubble, the Dutch tulip market just absolutely burst. People were trying to corner the market. In the 1880s, there was another real estate bubble. We already know about the 90s with the NASDAQ and stock market. What about Beanie Babies in the 80s? Those things, people were trading those things, thought they were going to retire on owning Beanie Babies. And the real estate market that we just saw in the last decade was an absolute dismal failure. People were taking money out of their homes, they were taking money out of their investment accounts, and they were trying to flip real estate, and people got burned in 7, 8, 9, and 10. And we still haven't recovered from that bubble. So we know these things do happen. And I want to bring back up the gold charts from just the last decade. If we look at this, we can see the market has zoomed up. And it's a matter of when does it roll over and die again. Now we're going to take a quick break. When we come back, we're going to talk about what you can do to earn money when the market's up, but more importantly, what you need to do if the market drops so that you don't lose that nest egg. You're watching Savvy Investor. I'm your host, Michael Canet, and we'll be right back.
Join the host of the nationally syndicated TV series The Savvy Investor and best-selling author Michael Canet for this very important life-changing workshop. Michael and his team of advisors from across the country have been helping families create and live the retirement they envision by carefully crafting a retirement income plan that can withstand any financial crisis. Michael will give you the tools you need to make sound investment choices and help you prepare for your golden years. At this workshop, you'll learn more than just where to invest your money. Michael will also share tax strategies that could save you and your family thousands in tax dollars. You'll learn important estate planning techniques that can help you avoid the high cost of a nursing home, as well as reduce or completely eliminate any estate tax. Now you can join him in person for these very informative workshops. They could be the answer to creating the safe and secure retirement you deserve. Call 866-597-1040 to see if you qualify to attend one of these workshops with best-selling author Michael Canet, host of The Savvy Investor. Seating is limited, so call 866-597-1040 to join us.
Remember when life was simpler? When things didn't move quite so fast and the world didn't seem so complex? Remember that? We do. And as the world around us has continued to speed up, becoming more complicated, more and more uncertain, we have managed to keep things simple, providing sound, easy-to-understand financial advice and proven solutions for the road ahead. From investments and insurance to tax reduction strategies, estate planning solutions, and guaranteed retirement income you cannot outlive, we're your single point of contact, a single call, a voice you recognize well, and a partner who will be by your side for the entire journey. We can't stop the world around us, but we can help ensure you're prepared for what's to come.
For a special free guide entitled 10 Things to Know About Retirement Income, simply contact us today.
If you're in retirement or retiring in the next 3 to 5 years, you must read Michael Canet's best-selling book, Surviving the Perfect Storm. Best-selling author and National Quill Award winner Michael Canet's Surviving the Perfect Storm is a must-read to prepare for your golden years. This amazing book can be yours absolutely free, but you must call 866-597-1040 now. Supplies are limited, so be one of the first 25 callers to receive your free limited edition autographed copy of Surviving the Perfect Storm. Call 866-597-1040 now.
Welcome back to The Savvy Investor. I'm your host, Michael Canet. Today we're talking about gold and how you may be able to participate when the stock market goes up, but more importantly, how do you protect yourself if the market happens to drop? Because you certainly don't want to lose your nest egg betting on gold. Now before we go there, like we do every week here on The Savvy Investor, I want to take a little bit of viewer mail.
You've got mail.
Mike from Pikesville is writing us, and he says that he's considering putting all his money into gold because the Federal Reserve just keeps printing more and more money, and he's concerned about the federal debt issues facing us. And basically, he sees the collapse of the dollar and the government in general. And so, Michael, what I would tell you, and this is what we tell most viewers and most of our clients, that look, if you really think that things are falling apart and that the federal government is going to collapse, if that's really your viewpoint, now, I don't happen to share that. I think the printing of the money causes inflation and it does devalue your dollar and your spendable money, but I don't think we're going to get to the point where the federal government collapses and there's going to be chaos on the streets. I don't think we're going to get to the point where gold is the fiat, it is the currency. Think about how much gold you'd have to show up with to buy a house. That's much easier to do than maybe showing up to buy a cup of coffee from Starbucks. How would you do that with a gold coin or something? I mean, is it a 6 pence? So I don't think the federal government is going to collapse, certainly not in our lifetime. But if you truly believe that things are that bad and things are falling apart, I know it sounds kind of cynical and kind of flip, but I personally, if I thought the government was going to collapse and things were going to go basically into hell in a handbag, I would be buying bullets, I'd be buying guns, toilet paper, that might be a valuable currency, and water. Because really think about it, it doesn't matter how much gold you have. I mean, and even for that matter, it doesn't matter how much currency you have. All of a sudden the currency becomes firewood, and gold still has that shiny, attractive feel to it. But if the federal government collapses and the society breaks down, people are not going to want to hoard gold. People are going to want the basic things they need to survive and to protect themselves. So, Michael, I think that your concern about inflation and debt crisis, that certainly warrants holding some gold as a hedge, but I don't know that I would put 100% of my money into that. For that matter, I wouldn't put 100% of my money into any type of investment vehicle. But great question, Michael. We certainly appreciate it. Now, I want to read our second question here. So Kathy from Lancaster, Pennsylvania is writing us, and she's thinking about adding gold to her portfolio, and she wants to know how much is appropriate. And Kathy, as we say here every week on The Savvy Investor, everybody's situation is unique and different. And I don't think there's the right amount of gold. I think there's the right amount of gold in a portfolio or commodities in a portfolio that fit your overall needs. In general, what I would tell you to do is that the goals, the outcome that you're looking for should dictate how your portfolio is allocated. You take the least amount of risk possible to accomplish your goals. And if you need gold in that portfolio to help accomplish the goals, be it a hedge against inflation, be it just an investment play, I think that it's reasonable for most people to take maybe 3, 5, perhaps even as much as 10% in any particular sector. And certainly gold is a very, very narrow sector. So bottom line, Kathy, maybe 3, 5, as much as 10% might be appropriate for you. I would certainly want to understand a little bit more about your situation before I gave that as a recommendation. But the bottom line here is 5 to 10% tops. Make sure it fits your overall planning objectives when you're looking at the big picture over the long haul. Now, we know retirement planning can be daunting at best. It's scary, overwhelming. Send us your email. We answer them every week here on The Savvy Investor. We answer them regardless if they show up on air. So send us your email at thesavvyinvestor@primefs.com. Again, thesavvyinvestor@primefs.com. Questions, concerns, thoughts, even comments and feedback. We welcome it all. We absolutely respond to everybody. Now, let's talk a little bit about how gold works and why gold may still be a great inflation hedge, why gold might still be a great place to invest in the near future. All the indicators suggest gold is a good buy in the near future. Bernanke keeps printing money, and to some extent, his idea about printing money here is that he's trying to force up inflation. He's trying to put pressure on prices so that prices continue to grow, to continue to get more expensive, and you stop saving dollars. Think about it. You're putting money in a savings account earning 0.1%, and inflation's at 2 or 3. At least that's what his goal is. He'd like to see it in the 4 or 5 range to get you spending money. We know the United States debt is a problem. European debt is a problem. I mean, Greece is still in the process of failing and going into bankruptcy. Spain and Italy will be soon to follow. There are lots and lots of barometers out there that suggest that gold is a good place to be for the near future. Now, as we mentioned, it's not the right tool for everybody, but it might be a good spot to explore for you for a percentage of your portfolio. Now, given the fact that we agree that we think the market is going to continue to grow, I want to bring back up that chart over the last 10 years just to kind of show where the market's been. And my concern here is that even if we buy into the market today, because we do think there's room to grow, I have to be careful for my investments and for my clients, and you should be careful for you and your investments. What happens if the market drops? Now, we're going to take a break. When we come back, we're going to discuss how to protect yourself in a falling gold market. You're watching Michael Canet on The Savvy Investor. We'll be right back.
Join the host of the nationally syndicated TV series The Savvy Investor and best-selling author Michael Canet for this very important life-changing workshop. Michael and his team of advisors from across the country have been helping families create and live the retirement they envision by carefully crafting a retirement income plan that can withstand any financial crisis. Michael will give you the tools you need to make sound investment choices and help you prepare for your golden years. At this workshop, you'll learn more than just where to invest your money. Michael will also share tax strategies that could save you and your family thousands in tax dollars. You'll learn important estate planning techniques that can help you avoid the high cost of a nursing home, as well as reduce or completely eliminate any estate tax. Now you can join him in person for these very informative workshops. They could be the answer to creating the safe and secure retirement you deserve. Call 866-597-1040 to see if you qualify to attend one of these workshops with best-selling author Michael Canet, host of The Savvy Investor. Seating is limited, so call 866-597-1040 to join us. If you're in retirement or retiring in the next 3 to 5 years, you must read Michael Canet's best-selling book, Surviving the Perfect Storm. Best-selling author and National Quill Award winner Michael Canet's Surviving the Perfect Storm is a must-read to prepare for your golden years. This amazing book can be yours absolutely free, but you must call 866-597-1040 now. Supplies are limited, so be one of the first 25 callers to receive your free limited edition autographed copy of Surviving the Perfect Storm. Call 866-597-1040 now.
Now keep in mind that just like any tool, there's the right tool for the right job and a wrong tool for the wrong job. We have just scratched the surface here, and you'll want to know more about how today's conversation might or might not fit your needs. Ask about fees, surrender charges, market risk, interest rate risks, how the guarantees work, liquidity, and much more. Remember, the right tool for the right job.
Welcome back to The Savvy Investor. I'm your host, Michael Canet. Today we're talking about gold and whether it still makes sense to own gold in your portfolio, or if you're contemplating buying it, should you be? So we've seen all the reasons and all the indicators that suggest that gold still has a reason to run up. I want to talk a little bit here now about some of the indicators showing that there's a bubble. Newspaper ads offering to buy gold at prices unbelievable. You see people running around the country in hotel rooms buying gold. You see ATM machines in Europe and the Middle East and even down in Florida. You can stick a card into the ATM machine and get little gold bullion out. That's a problem. That's an indicator that, hey, we may be in a gold bubble. So now I want to warn you, what I'm going to share with you now is big time stuff. This is something that hedge fund managers do. Now, what I'm going to share with you is not a recommendation. It's not for the faint of heart. If you do this wrong, you could lose a lot of money. Be very careful. I'm going to talk to you about option trading. Now, again, I could spend 2 or 3 days, 8 hours a day, training you on option trading, and we still wouldn't get to all the little nuances of what you need to do. So before you act on anything you see in today's program, you make sure you talk to a professional, because if you goof this up, you will lose a lot of money. All right, that's how come hedge funds make so much money when they're up and how they lose so much money when they're down. They do this right, it's great. They do it wrong and they lose a fortune. So now this is how this works. Let's say you have a little bit of money that you want to invest in the stock market, that you want to buy gold with. We're going to use $100,000 just as a number. Here's what we suggest you do. Take that $100,000 and maybe you take 85 to 95% of it and you go park it someplace in real safe money. Now, we've talked about what safe money means in the past, but I want to show you, I just want to review it with you again. You can go to a bank and buy things like CDs and money markets and those type of things, equity-linked CDs, those type of safe things at banks. You can go to the federal government and buy treasuries and EE bonds and TIPS. Although if you think the federal government's going to collapse and you're buying gold for that reason, maybe relying on them for safety might not be the right idea. But I still think that the federal government offers some security there. And the last place for safe money is at insurance companies. You can go buy fixed annuities, equity-linked annuities, but we're talking about safe money. The bank is going to pay you back if something goes wrong, the federal government will pay you back if something goes wrong, or the insurance companies will pay you back if something goes wrong. So your money is comfortable. Now let's take 80 to 85% of this money. And what we're going to do is we're going to go buy some sort of safe vehicle. It's going to earn some sort of interest. Now the remaining 5, 10, or 15% of your money, you're going to go purchase what are called call options. And I'm going to give you an example of a position that you can buy on call. Now, this isn't a recommendation, but it's just something by way of example. GLD is a position that you can go purchase a call option on. And here's how this works. If you buy this option and the stock market goes up, the position goes up in value, you can make a bundle. It's almost as if you own the position in the first place, but you just didn't have to put the same amount of money into it. If it goes up, you make out like a bandit. You can make a bundle. And here's the best part. If it goes down, if you lose, you're only going to lose the value of that call purchase, that 5, 10, or 15% of your investments that you use to purchase the call position in the first place. In the meantime, perhaps, just perhaps, after 1 year or 2 years or 3 years, you might have 100% of your position back, the original 85, 95% that you put into that safe money, between the interest, and maybe you got some sort of bonus or some sort of incentive to put your money into the account. You might have 100% of your principal back within 2, 3, 4, 5 years. That's a way that you can invest in gold. You can win on the upside, and if the market collapses, you don't have to worry about losing that retirement nest egg you've worked so hard to put aside and you're going to rely on during your later years of life. Now, today's show, we talked about some really, really tricky stuff and some really cool stuff. Option trading, as I said, is not for the faint of heart. You do not want to goof this up, you do not want to make mistakes, and you do not want to do this wrong because you can lose a fortune. Nothing I said today should be construed or taken as a recommendation. You need to talk to a financial professional before you go there. Now, we see reasons why the stock market and gold can continue to go up. Bernanke is still printing money. He said he's going to keep interest rates low for the next year and a half with the idea of pushing inflation up. The United States government has this debt crisis, and the fact that the fiscal cliff is just around the corner does not take away from that problem. Europe is a mess. Spain is failing. Italy is failing. Greece is failing. Half of Asia is failing, or at least in strict, dire consequences financially. Japan, GDP to debt ratio is over 250%. There are lots and lots of indicators out there that suggest inflation and fiscal problems are coming down the road. Gold does work as a hedge against those things. But as we mentioned, there are plenty of things out there to suggest that gold is in a bubble. Anytime you see newspaper ads all over the place saying, we'll buy your gold, anytime you can go to a mall or a motel or hotel and they're buying gold out of a room in a hotel room, anytime politicians are hawking gold on television and telling you to come in and buy it, the fact that you can go to Florida and stick your ATM card in a machine and get gold bullion all seems to be indicating that there is a bubble. Now, if you've been watching The Savvy Investor with Michael Canet, we'll see you next week. If you'd like more information about today's show, you can contact our offices with our toll-free number, 866-597-1040, or visit us on the web at www.thesavvyinvestortv.com. When you visit our website, sign up for our free weekly newsletter where we give you tidbits each week to help you make smart money choices. Every retiree's goal, from our perspective, is to take the least amount of risk possible to accomplish your goals. Too often, financial advisors and stockbrokers assess your risk tolerance. Just because you can tolerate the risk doesn't mean you have to accept it. Remember, at the end of the day, it isn't how much you make, it's how much you keep.